Now.
Good evening, everyone, and welcome to the Investing Summit organized by Synergy Traders. So thank you so much for being here with us today. So the fact that you guys are here actually shows your interest in investing, and this is what we're going to be talking right now. I have designed an investing presentation for you guys, and like I promised in yesterday's trading session, this is pretty much a little bit of a continuation of what we have discussed. So we're going to pick up where we left off, and I told you guys that we're going to talk about different accounts that we can have. We're going to talk a little bit about 401ks. We're going to talk about IRAs, the Roth IRAs, and all that fun stuff. So let's get started with build your own wealth and income ecosystem from the markets. This is where your financial independence journey begins, and create income and increase wealth. So for those of you that don't know me, and if you are here for the very first time, my name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud.com, which is a trading and investing educational company that is focused on educating individuals how to day trade, swing trade, actively invest into the stock market, into the futures market, but not solely. I come with 19 years of experience in this domain. And also prior to this, I have 10 years in investment banking. I'm also the CEO and founder of TradeOutLoud.com, like I said, and we do run actually one of the oldest programs that we have, and it's actually one of the programs that we started with back in 2010, and that is the swing trading service. It is the swing trading and investing service for stocks and ETFs. So again, since 2010, wow, literally 12 years. Wow, I can't believe time flies, how time flies. And I also run a trading room for futures since 2010. I literally swing trade, and I dedicate about 10 minutes a day to swing trading a day. And I'm going to show you exactly how I do things. And day trading, I trade basically about 2 hours a day. Some days are easier than others. And in some days I'm literally done in probably 30 minutes or 20 minutes, or little, let's say to like, I don't know, about an hour, let's say about an hour. And then some days, I got my work cut for me, so it takes me a whole 2 hours. And this is the goal of trading, because we're in the market to create income, to create our paycheck, and to create wealth. We're not here. So the market enables us, and definitely has enabled me, to create an independent financial lifestyle that is not chaining me to the computer. Terry, am I going over the market view? Of course, if you guys want charts, I'm ready for charts. Just to think about some stocks that you want to throw at me, and I'll give you my take. And I'm also going to share with you the trades that I took this week with my traders, and the performance, how's that? Okay. So we do offer trading education, both for futures and for stocks, for day trading and swing trading and investing, along with active investing. And I'm going to differentiate the concepts. Because I specialize in high velocity trades, it means that I focus on precision, and I focus on rotational points. I focus on where the volume is coming into the market, transition into targets. So I'm extremely selective. You're going to see, like, if you browse through my trades and my history, and my performance, you're going to see that, for example, in 2020 and 2021, we had an extremely active year where we took a plethora of trades. And this year, we were much more selective in our trading. And that is because of the market environment. All right, so let's get started. Quick disclaimer, all that we're going to be discussing today is for educational purpose only. It should not be construed as investment advice. Regarding the purchase or sale of securities, options, futures, forex, or any instrument of any kind, I am not a financial planner, I'm not a financial advisor, and I'm not a broker. These are my own personal opinions on the market, and this is what I do. As you can see, I have been on a lot of shows. I have been to a lot of contests. I have been invited to present to a lot of media outlets. I have also won last year, and we're in the contest this year. Okay. And last year, TradeOutLoud has been nominated Benzinga's overall winner in the best financial literacy tool for 2021 category out of 400 distinguished companies revolutionizing the fintech industry, offering services, offering education. So number one right here. Okay. Also last year, I won number one on the best trading battle. And this year we had it in March. And again, I won the trading battle. So this is live trading environment where you get to take a day trade, you get to take a swing trade, and you get to get into an investing position. So how much do you really, how do you, I'm sorry, do you know how much money, guys, do you need to retire? Like, do you know, literally, have you made like any kind of calculation? And I know there are retirement calculators out there, but do you really know how much you need to retire? And I could probably provide you guys with one of those retirement calculators if you want. But in any case, investors feel that they need an average of $2.5 million in retirement to maintain their lifestyle, according to a Mason survey. Wow, that's a lot of money, right? Do you think like if you're going to a regular job making like $50,000 to $60,000 a year and working 12 hours a day, do you think you're going to get to $2.5 million? Not so, I don't think so. So that's about, right? So we're in sync with the general public, right? Because that's about 2.2 million more than the average balance of $385,000 those individuals actually had in their 401ks, right? So we're talking about individuals that were over 55 years old, close to 65, so into that bracket, right? So they were asking those individuals that had very little into their retirement years, how much they need to save up. And that was pretty sad because they felt like they need $2.5 million in their retirement account. They only have $385,000. So how do you think those individuals felt that, they either need to make some drastic changes in their lifestyle, or definitely start doing something to produce some kind of income and to generate some wealth? All right. So I have created, without even actually, thinking about it at the beginning, but when I quit my job and when I started day trading, and it wasn't an easy journey for me day trading because I came from the investing field. I've always been swing trading. So I'm very familiar and extremely comfortable with investing, very comfortable with swing trading. But the reality is that I wasn't very familiar with day trading. So I thought, hey, how different can it be? Well, I can tell you right now, it's a totally different ball game. It's a totally different animal. So when I literally took tons of courses, and I was very fortunate to be mentored into day trading. And that is what literally propelled me and actually helped me generate above average income from the markets and actually trading less than 2 hours a day. When I started day trading, I was day trading stocks, and my schedule, I would be in front of the computer around 8 o'clock or even before 8 o'clock, before companies started to report earnings, because we're in full swing earnings season right now. And I would actually be done 7 or 8 o'clock at night because I really wanted to make it work. I was in front of the market. I wanted to absorb. I was like a sponge. I was absorbing everything because there was a lot of action in the market. Definitely my higher time frames from investing, right? Because I was looking quarterly charts and monthly charts, etc. Suddenly became a much smaller zip code on the 1 minute, 2 minute, 5 minute. Everything was happening super fast. I had to be super quick in order entries. I had to use hotkeys because those helped me a lot in trade execution. But anyways, creating the wealth ecosystem is not that hard because all you need to do is basically learn the system. So whether you're learning how to day trade or learning how to swing trade or learning how to invest, it's basically the same common ground, right? You were talking about technical analysis, which occupies about 90% of what is happening into the market, and about 10% you need to understand what's happening on the fundamental side. So I create income by day trading because day trading is an income style of trading. Day trading, I am putting money into the market. I'm putting my allocated risk and I'm expecting my return. And this is what I'm getting. And some days I'm getting paid, some days I'm not getting paid. But overall, I'm looking for positivity. I haven't had a losing month. I think it was since 2009 or 2010. So that speaks volume. You could go to our portfolio. You could go to, since we started the trading room, and you can see our performance. We've never been down. And those are all the trades, excuse me, that we take into the trading room. With the good, the bad, and the ugly, with all the stop outs, all the winning trades, all the home runs, everything. So basically, when I'm day trading, what I'm doing is I am calculating my risk per trade based upon my account size. I take the trade. I don't take more than 1 to 3 trades in a day. So you could see in the performance that I don't literally trade that much. And that is because I don't want to rank up commissions, because in the futures market, we still have commissions, very low commissions compared to the wins that we have, but still there's still some commissions. So what I do in day trading, we're going to talk about this into compounding. So after the month closes, I pull my profits out. I literally cover all my bases and I pay for all of my expenses, and whatever is left, I reinvest. I put it into my swing trading account. And if I have some extra, I put into my investing account. So I'm reallocating all of my, let's say, spare income into these other 2 accounts. I use one account for day trading, one account for swing trading, and one account for investing, whether it is active investing or longer term investing. If you want, and if you don't want to keep your micromanagement hat on, you could actually have 4 accounts. And the 4th account would be the one that is simply for investing, typically for investing. And that account, literally, you look at it every once in a while, every quarter, for example. So that is how I start generating my wealth. And I'm going to show you exactly what you need to start getting started into investing. So wealth is generated via swing trading and investing, or even active investing, because I do love active investing. So I was talking earlier about compounding and how important it is to compound. So for example, if you have a $50,000 account, let's say, right, and you have that money invested into the market, whether you're 100% invested or whether you're 75% invested or 50% invested, and it's only normal to cover your bases and scale out when you see that the market conditions are changing. Because what you could do is you could always exit and you could always rebuy again. So these decisions are made usually on monthly charts. And when you take profits, for example, on those monthly charts, you have more available cash in case the market pulls back more than 10%, if it's going towards 20% or 30% or whatever the case may be. But you, excuse me, usually after it pulls back a decent, hold on a sec. Sorry, guys, I was choking with air. I needed just a sip of water. So usually when the market pulls back about 25 to 30%, that is a decent pullback zone. And if that zone doesn't hold, then it's much more likely to pull back. So for another, excuse me, for let's say a 50% retracement. 50% is considered a normal retracement. Okay, sorry about that. I was seriously choking here. Okay, hope I'm better right now. Okay, so when you allocate cash into the market, so for example, like I said earlier, let's say you have $50,000 or $500,000, the amount is not relevant, but you have your money invested, whether it's 100% or 50% or 25%. The reality is that you should always have some extra cash to reinvest for other trading opportunities, for other investments. Another easier way to increase your wealth is to allocate and to compound. So for example, think about this. What if you allocated, instead of paying your, instead of pulling money out of your account, if you have a 401k, and we're going to get to that as well, instead of putting money into your 401k, how about you put it into your own investing account and do your own investing decisions, take your own investing decisions. So think about this. If you put $500 every single month, that is $6,000 in a year. Okay. But when you put those $500, you don't have to wait a year before you make the investment, because you can invest as little as $500 in the market. There's no account minimum when it comes to investing. So for example, let's say this month I'm allocating, I have a surplus of $500 that I can put into my trading account, into my retail account, into my investing account. So what do? I could also find a stock, right? You could buy $500 worth of a stock. So I'm going to give you an example, right? So I do scan the market almost every single day. And especially now with this market going up and down and up and down. So I scanned on Sunday. I usually scan on the weekend. I scanned this weekend. On Monday, we had what we had. Yesterday, we had the market, literally, it was a roller coaster. We're going to talk. I don't want to get into the market because I want to show you some charts. So basically, I had to scan almost every single day since Sunday because the market was so wishy-washy, right? One day was up, the next day was down, today was up again, right? Today and yesterday was up, right? But on Monday, after that really strong Friday's close, right? Everybody thought, okay, it's going to go higher. And what it did a really shallow retracement, but getting ready for a bull sandwich on Tuesday. So that's why on Monday night, got back to the drawing board, scanned again. I'm going to show the trades that we took. Okay. And yesterday I scanned again. So I'm going to show you the trades that we took. So in my scanning, I found this stock. It's called ETER. So this is a very actual. So this stock, ATER, has really good volume, right? So as you can see, the stock is very declined. Let me see if I could put it up here. ATER. All right, here we go. All right, so I'm going to show it to you guys now, and then we're going to get back to the slide. All right, so I hope that you guys can see the screen. So this is the stock. All right, so I scanned it here and I noticed that, oh my gosh, this is such a great breakout over $2.50. And it could totally run higher, at least into the $4, $4, and then back into these highs of $6 or even $8. And if not, it's going to produce like a massive short squeeze because it's getting ready for a double bottom. And as you can see here, for example, on the monthly chart, it has picked up. Right? It didn't have a rotation yet, but on to the weekly chart, and this is active investing. You could see that we had an inside bar, decision bar, rally, right? So basically what I'm looking for $4 and I'm looking for an $8 target into this. So what that means is how I'm going to break down this trade for you. So the entry is $250. The stop is $2. So you're risking 50 cents, right? That is your risk per trade, 50 cents, right? So my targets are long-term, right? $4 and $8. I repeat, this is not a swing trade. This is an active investing trade. My risk is $500. So remember the $500 that let's say I've made day trading, or I saved, or, I got a paycheck, or I got a bonus, or whatever it is. So I allocated, I put it into my account. I want to make that $500 work for me, right? So it's a really small investment. It's $500. If I lose $500, right? But if I win, right, I'm going to pick 200 shares for this example purpose, position sizing for $500. So I'm going to take it with 200 shares. And if the price goes at $4, that is $300 profit. So that means that time horizon could be like 3 months to 6 months, right? For that $4, 3 months to 6 months, let's say. So that would be $300. So not only that I have my initial investment of $500, but I have an extra $300 in the next 3 months, right? And then if it gets right into target of $8, that would be like a $1,100 profit. Plus the $500 that I already have, that is going to be $1,600. So you can see how this is the concept of compounding into the market. Okay. How does your scanner work? I use multiple scanners. I use Trade Ideas, I use Benzinga Pro, and I use Bar Chart. So I am such a tech junkie, like it is ridiculous. So I have, if you are thinking of a software for trading, I have it. Okay, I have it. I'm there. So then you get to profit and reinvest. So you think about, for example, even at the end of the year, let's say if this stock is going to get into the $8 area, or maybe not, and maybe it's going to produce a reversal. Maybe I'm making only another $500, but still I doubled my investment rather than leaving your money sitting in a savings account. Okay, so you do not need to have a huge trading account to start investing. Simple steps to becoming an investor are: you open an account. It's easy as opening even a Robinhood app or Webull or TD Ameritrade or TradeStation or Fidelity, whatever it is, you can open an account. You don't have a minimum requirement because you're not going to be day trading. That's the beauty about it. Number two, you determine your risk tolerance. So what is your risk tolerance? So how much can you, and we're going to talk about that in depth, is how much can you really tolerate if the market goes down. Then you got to find us, and there's an easier way to determine your risk tolerance if you do active investing versus, long-term investing like Warren Buffett does. So for example, in active investing, you determine your position size. So you determine your risk level, right? And you determine your risk level by looking at your account size. So for example, if you have, let's say, $50,000 account size, then 1% would be on a conservative side. If you have a really, a high time horizon, and if you have, for example, if you want to increase, but again, you really have to know what you're doing in the market, you could use 4% or even 5% on your investment. And this is typically what I do. For day trading, I don't use more than 1%, but for swing trading and investing, I use between 3 and 5%. Also, find a stock that you know, right? And yesterday I was talking about stocks that we all know. So if you don't have a scanner, if you don't know how to scan, right? I understand, right? Because not everybody has a financial background. Not everybody has been trading. Everybody's coming from different walks of life. But hey, guys, you can learn how to scan. And it's so easy to learn how to scan. We actually teach it in our course. We dedicate about 1 day, to scanning, to position sizing, to share sizing, actually, to determining the risk tolerance for everybody and all that stuff, and kind of like working with charts. So you got to find a stock that you know, or a stock that you scan, right? Stock that you're comfortable with. Whether you're going out and about, if you're a guy, you probably have, I don't know, Home Depot, on your watch, right? You go to Home Depot, parking lot full. Well, for example, you go to Lowe's, parking lot full. So hurricane season actually very favorable for these stocks. Yeah, there's a lot of seasonality that can be incorporated here. For example, in hurricane season, or when you see like a hurricane approaching, there are certain stocks that really move, and that's Home Depot, that's Lowe's, that's Walmart. And there's Costco as well is moving really well. And guess what else? Generac, right? Generators. So it's not that hard to scan, and it's literally common sense. The other thing that I really urge is to look at technicals, because most of the people that are investing and most of the people that have their money that are being managed by someone else do not know technicals. So it truly pays off to know technicals, because this is something that you're going to learn once and know forever. Even if you have your money invested with someone else, you could tell them exactly what you want from that position or from that account. And then you just hit the buy button. If you're actively investing or swing trading, you place a stop. If you're investing, obviously you're not using a stop. There is not one hedge fund or institution that is using hard stops into the market when they're investing or they're even swing trading. So here's what Warren Buffett says: if you don't find a way to make money while you sleep, you will work until you die. And he's absolutely right. Do you guys want to do that? No, that's why you're here. And I had a job in pretty much the same line of work that I'm doing pretty much right now. And I saw the potential, and that's why I wanted to start making my money work for me. And I wanted to start, generating my own income, generating, my own retirement account, because I realized that if I, stick with, a salary, that's not going to cut it for me. And I'm not going to get to where I want to be. I don't have the independence that I have right now. I could literally go anywhere. If I want to go to Hawaii right now, I pick up my computers and I go to Hawaii. And newsflash, when I'm traveling and when I am on vacation, no, it's not typical of vacation, because I still trade those 2 hours a day. And it's great for your rhythm. And also I take my computers with me. So I have a travel laptop and I have some travel monitors. And yes, I do have a little trading station when I'm away. So compounding, understanding compounding, right? You have a job or you're day trading. So in my perspective, and in my case, I'm day trading because I don't have any other job. I'm a day trader. So that is where I'm generating my income. If you have a job or if you have a side gig, and by the way, guys, there are so many opportunities right now. You guys can see what's happening out there, right? If I don't know, maybe some people say, hey, I don't know what else to do because I don't have any special talent. I don't have any special skills. And I don't know how to pull money out of the market. I don't know how to generate affiliates. I don't know how to do this. Hey, you know what? Do you know how to cook? Right? Do you take a look at Martha Stewart, right? That's her skill. Or look at everywhere, out there. Take a look at everything that is around us. Yes, you can make money, and yes, you can find a sidekick that can generate you some income. So whatever it is that can generate you income, that extra income, you throw it into a swing trading account or into an investing account, and you can create wealth. And you don't have to throw a lot of money. So I gave you an example with $500. You could go as little as $100, but make sure that you allocate a little bit of money to go into that account. Now, why I day trade futures, that is to generate income in 2 hours or less. And you can see here, these, by the way, these are not my results. My results are 10x what this is. But these are the results by trading with one full-size contract. Okay, that's right. One full-size contract. I repeat, one full-size contract. All our trades are timestamped. All our trades are transparent. All the trades are called on the mic in the trading room and typed in the room before they happened. Not only that, but they are trailed live into the room. I don't know anybody else that could do that. They're going to tell you, oh, wow, it's an area. Oh, you got to offer it out. This is the resistance area, or this is the support area, or this is where the target area is. No, I'm precise to the tick. Right. So if let's say we have the S&P at 3894.25. Yeah, that's it. That's the price. So these are the results. As you can see here, this is just by trading with one contract. Okay, so I just want to show you real quick. Okay, hold on a sec. Okay, I just want to show you real quick. For example, what kind of trades did I take today? Right, today I only took one trade. I took NASDAQ long. By position sizing, like I said, my position size is a bit wider. My position size per trade is it's actually $5,000. Sometimes I go a little bit more depending on how the market environment is. I allocate a little bit more. So you can see that I'm not trading with only one contract, but you can see the exact entries, the stop, the target, blah, blah, blah. And you can see that this particular index has reached all targets and the last trail, right? Because I scale into targets, I scale out into targets, and my last trail was at 20. So total accumulated up 36 points. That's $720 by trading only with one contract, right? Because performance, for simplicity, is by one contract. Okay, so this is just a quick example of the transparency that I'm offering. I've always offered that. All right, so why I swing trade and invest? Well, first of all, I'm making my money work for me. In swing trading, I'm scanning and setting alerts, orders, and my work is about 30 minutes a week. I'm adjusting stops and orders and entries. That's about 10 minutes a day extra aside from the 30 minutes a week that takes me to scan. Also, investing, I scan for new opportunities. That takes about 20 minutes per month. Why? Because I already scan every week for trades, for my swing trades. And if I see any kind of opportunities for long-term, well, you guessed it, I am going to put it on a list with alerts. And if the parameters are met, I'm going to take my new investment as well. So determining your risk tolerance, because this is very important for every investor out there or trader. Risk tolerance is your ability and willingness to live through a decline in the value of your investments. When you're trying to determine your risk tolerance, ask yourself this: how comfortable am I maintaining my position when the stock market is experiencing a large decline? So how comfortable are you right now? For example, if you bought NVIDIA last year, let's say a summer of 2021, and that is when you got it, let's say in your long-term account, and how comfortable are you right now that NVIDIA is down? Okay, so I can tell you, like, I have a lot of friends, I have a lot of, basically, my friends are comfortable because I mentor them, and my clients, right, and my members, some of them are, for example, very comfortable, and some of them, don't stay in the trade into the maximum decline because they know that at the first rotational point and the first rotation that signals a sell, they're out of the market and they're looking for a buy signal again. Okay, so it depends on whether you have that tolerance, whether you're going active investing or simply investing. Your risk tolerance plays a crucial role in your game plan for growing your money without stressing daily about it. How many times, a lot of people stress about it, and some people don't even look at their retirement accounts. I'm going to tell you something. Typically, when you're investing your own money, you're very tempted to look at your investment account very often. People that have their money managed for them, they don't even look once a year. And I can tell you, true story, I have some acquaintances that don't even know, they know how much money they have in their retirement, in their, for example, into their long-term account, money that is being managed by them. They had no idea. They have absolutely no idea what positions they're in or what funds they're in. So how to determine your risk tolerance, right? So number one, you have to determine what your investment objective is, right? Are you investing regularly and looking to grow the value of your nest egg? That is compounding, right? Or do you already have a decent nest egg, right? So you have your money in there and rather grow it. Are you looking to preserve it and live off the income it generates? So each will convey a different tolerance for downside price per risk. When do you need the money? That is the second case, right? So first are your objectives. Second is when do you need your money? Your time horizon is a crucial piece of equation. The sooner you need the money, the lower your risk tolerance should be. So that should be mostly geared towards active investing or swing trading, right? Money you need for a home, down payment, or maybe you want to buy a new car or whatever the case may be, and all of these priorities are going to be entirely different, and they represent a different time horizon than the money you're accumulating for retirement that is still years away, right? Because when you're thinking about your investment objectives, you're always thinking very long term, and of course you're thinking based upon your age. So for example, if you're 20 years old right now or 25 years old right now, you're thinking, okay, I have that retirement account. It's going to, keep on compounding into that account because my objective is to retire 30 years from now, right? Where if you're 55 right now, or let's say you're 60, and if you want to still buy a house or buy a car, whatever the case may be, you have to make money. You do not have a really wide risk tolerance, and therefore you're going to go for active investing, right? Or swing trading. So how would you react if your portfolio lost 20% this year or last year? Assessing your risk tolerance involves thinking about hypothetical challenges and worst case scenario, right? If your investment lost 20% of its value, would you lose sleep at night and pull out all your funds? Because typically this is exactly what happened in 2008. And this is also what happened this year. People freaked out and pulled their money out. Why do you think the market snowballed? Or would you leave it invested and consider putting even more money into the market to capitalize on the discount, right? And this is what a wise investor would do. Why learn how to trade or even invest, right? First of all, you want financial independence. You want to get rid of credit card debt. That is really bad debt. You want to buy a car, I'm sorry, that's a liability. But if you want to buy, for example, a home, right, that is good debt. You want to be control over your money. You want to know, okay, it's kind of like calculate, predict how much money you're going to, based upon obviously the market environment, how much money you can you can make into the end of the year, because you have an average of that you have in mind and you're thinking about the market. Be in control over your life. Work from home, literally, like I said, very minimum time required. Definitely, you do have to have the proper training for that. Customize your trading hours to fit your lifestyle, whether you want to scan at night, whether you want to scan in the morning, whether you want, have your coffee on the terrace and scan for some stocks. It's your new Wall Street Journal, your laptop and your scanner right now. Whether you want to pay off your mortgage, pay off credit cards, pay off student loans, take vacations, spend more time with your family, more you time, right? How many of you guys don't really have time for yourself? Protection and recession, right? So that's a big thing. So for example, if you're working, you have a salary, right? So do you think that your employer is going to raise your salary based on the inflation? I haven't heard anything like that. And inflation is through the roof right now. So you have to think of generating extra income. That's why I brought up my ecosystem, my wealth ecosystem, generate income. And it's fine if you want to dab into day trading. It's fine if you want to dab into swing trading, right? But day trading is income producing because you're in and out the same day. You have access to your cash at the end of each month. But in swing trading, you can't, because you have your positions tied up. And so is in active investing, and so is investing, right? All right, let's talk about the reality of the 401k and the Roth IRA, okay? I would never recommend, and again, this is my personal opinion. I'm not a financial advisor. You make your own trading decisions. This is me, okay? This is me right here. So I pull my money. I'm going to show you the 401k that I had, that I pulled my money out. So I never would recommend a 401k unless you have an employer match. They are basically just index funds that over diversify your cash across a variety of unknown businesses you have no control over or insight to. How can you do the research to make sure you believe in the companies you are putting your money towards if you don't even know what they are? But here's the thing. Okay, so when I opened my true story, it happened at the end of last year. So at the end of last year, my account said, yeah, you really need, I had a phenomenal year, right, in trading. So my account said, you know what, you just got to do 401k. She's like, I don't want to do it. I don't want to do it. But then she's like, because I want to have access to my cash. If I want to buy something, I don't know, I want to go out there. Maybe I'm crazy. I want to go out there and buy a boat. I want to pay cash for it. I want to go buy a boat. I don't want to have my money in a 401k. Remember, tomorrow is not guaranteed. So what she said, it's like, don't worry about it. You're going to be able to trade. I said, I don't want anybody controlling my money. This is my money. This is what I do for a living. It would be stupid to have somebody else manage my money. So she said, don't worry about it. You're going to set it up and you're going to be trading your account. I was like, well, okay, whatever. I hate not having tangibility with my money. I love money. I want to have my money under control. I don't want to have it and access it when I'm 70. Okay. So what happened was, as soon as at the end of the year, as soon as my money was pulled out of my account, poof, just like that, to open this 401k account. And I opened obviously for all my employees. Okay. So what they did, the company that received the money, into that second, they allocated the money into funds. And that was on January 3rd. It happened on January 3rd. What happens is January 3rd? Market decline, right? What happens is January 3rd? Market started to decline. Okay. So I was thinking, it's like, I'm not going to invest anything right now. So I'm going to wait. And I'm going to wait. I knew that I had my money in there. I had no idea if they invested my money. Okay. No idea why they invested my money. So bottom line, I literally looked at the account. It was end of March and I saw down. It was almost close to 6% down. So my funds were close to 6% down. That was not too bad, right? But it was bad. It was bad because I don't have losing trades per month like that. I don't. So I closed the account, paid the fees, we're going to talk about that. So anyways, I don't recommend a 401k. And I highly recommend Roth IRA accounts for most investors. Take a snapshot of this slide. There's definitely, there's definitely a lot of information right there. So can you manage your money better than any professional? Question is, can you manage your money better than any professional? Well, first of all, you have huge fees that are charged in your long-term money, huge fees into your 401k. Monthly management fees, approximately $300 a month. Excuse me, $300 a month, that is $3,600 a year. And in 30 years, right? Let's say that's, kind of like, your retirement, right? In 30 years, that's $108,000 in management fees. Guys, this is management fees. This is not your money that is going every single month, your allocation going into your 401k. These are fees. These are fees that you're paying. Wouldn't you rather take the $300 and invest it on your own? Like, seriously, I'm not into this. So funds do not care if you make money or if you lose money. They're more interested into the fees. All right, you can see my name right here. This is Trade Out Loud. This is the 401k, right? This is actually mine, okay? So as you can see here, we have, so account bell, blah, blah, blah. All right, look at the date from January 1st. This is because this is where I was advised, right? Seriously. And then to the end of March. This is when I woke up and I'm like, what? Okay, that what? Down, because here's the thing, the shock came, not that I was down 5%. I can make that like this. Okay, it was not the fact that I'm down. It was the fact that they have invested my money without my authorization. And they took my money and threw it in an account. I was sure that from January, and you can see here that I didn't want to invest in January and February and in March because I didn't even look at this account. Okay. So rule number one is invest in you. You have to invest in yourself because that's it. That is where you will receive the best return on your investment. I don't know about you guys, but when I wanted to become a day trader, I was literally like a sponge and I bought all the trading education that I could find at that point. And I invested an arm and a leg. Then I took my mentoring to the next level. You guys, many of you guys know the history, right? And where I am right now is because of the mentoring that I have received. Your knowledge is now paying off because right now you can see here, your money is working for you while you're only working minimum hours. The only way to keep up with inflation is by making more money. Proper goal setting is the most important element in your success. And here are some rules when it comes to setting your goals. They have to be measurable. You they must feel achievable to you and must have a deadline. What happens if you don't have a deadline? You're never going to make anything. You're never going to succeed at anything. So for example, take something very simple as cleaning the house. And I'm really bad with that. Okay. So take, for instance, you want to clean the house and you go like, oh, I'm going to clean it tomorrow. I'm going to clean it tomorrow. Oh, I'm going to clean it tomorrow. Right. So you delay your cleaning process. But if you put your mind to it and say, hey, I'm going to clean the house between 4 and 6 o'clock, then that's what you're going to be doing between 4 and 6 o'clock. So set up a deadline, a measurable objective, a deadline. What's your number one goal right now for following these rules, right? So money in your bank right now on fire, right? Because what do you think inflation is doing? And then, if we have time, maybe, I don't know. I don't know if tomorrow we're gonna be here, but tomorrow I wanted to dedicate more time to charts and I wanted to do only charts. But if you have your money in the bank right now, it's just burning, right? What do you think inflation is doing? They're losing their value, right? The moment your money hits your savings account, it's losing value. What do you think banks are doing with your money? They're lending your money. They're making a lot of interest on your money. Do you think they're giving you any interest? Nope. Do you know what the interest rate is that you're receiving for your savings account? It's like this tiny, tiny, tiny. Okay. Okay. So the only way to stop burning money is to actually start making money into the market. So why is the best time to learn and earn? Well, first of all, You have earnings season, which is fuel for the market. You have volatility. This is not your grandfather's market. Algos are hotter than ever that are pushing price around. And we have had a substantial technical decline. So I'm thinking that we can actually set for some short squeezing. I'm not saying that this can be a trend reversal with everything that's going on out there, but this could be something hit. So trading is not a game. Trading is literally investing. It's not a game and it's not a gamble. Everything is with calculated risk and it's with a risk tolerance, whether you want to do active investing and allocate, let's say 1% to, let's say 4%, depending on your, skill and education, right? And it's commitment. Guess you have to be serious about it. Say, hey, do I really want to retire to have, let's say that $2.5 million, like Mason survey individuals said that they need in order to retire? You have to have the commitment. Are you willing to do it? Are you ready to do it? Do you have a goal? Are you going to set up goals for yourself, right? So the most important things in trading are rarely discussed, like confidence, conviction, patience, mental toughness, discipline, education. All of these represent 90% of the battle. And regardless of your trading philosophy, if your head's not right, then you won't be successful. Trading and investing 101. So when you think about investing or trading, right, whether day trading, swing trading, active investing, or investing, what do you think when you think about all these, all this ecosystem that can generate money from the market, can pull cash out of nowhere, right? What do you think it can do? Is it just a strategy? Is it just managing risk? Is it just knowing what the entries, the stops, the lot? No. Is it just psychology? No. Handling different conditions? No. It's actually the art of putting everything together. And that's why you need to have a really good system in place to know how to scan. Where to go? Where do I get my scans from, right? Maybe tomorrow we can talk more about, I'm not sure, but Davey can confirm at the end of the presentation if I'm still on tomorrow or not. I could share with you some of the software that I use and I absolutely love. All right. Invest in yourself. I think it's the best thing that you could do. I don't know about you guys, but I invested in myself and now I'm literally very comfortable to where I am right now. And I want you guys to feel secure because you have the skill, you have the knowledge to live through any kind of pandemic, to any kind of recession, to any kind of inflation, to any kind of depression, whatever comes out there, the stock market is going to be open. Okay. So the keys to the kingdoms are yours to unlock. And you can unlock any instrument, any kind of style of trading, with day trading, swing trading, active investing, or investing, whether you're doing stocks, futures, forex options, cryptocurrencies, whatever the case may be. You can trade Bitcoin, invest in Bitcoin, but you need to know when to buy it. You just don't throw money into Bitcoin, right? Most people think they could do it on their own and can become good at it, right? And they can excel at it. But how many great people have not had coaching? Think about sports, for example. I worked with and coach many great and successful traders. Do you guys know I still get coaching? I do. I have my mentor. Like I said, he's an institutional trader. I pick his brain whenever I get a chance and I pay for it. You would not believe I pay 5 digits, literally for an hour of his time. But that literally 5-digit number amount that I'm paying to me is worth tenfold. Okay. So we do have a class that is coming up and it is in August. It's actually in the second week of August. I'm just trying to verify the date here. And there we have probably about 10 minutes to get to charts. Yes, the class is between August 8th and the 12th. So it's Monday through Friday. It is live. It's a 5-day live course. It's about, and I'm going to teach you how to swing trade and actively invest in the stock market. Show you where you can find trades, show you how it's done, teach you everything there is to know about technical analysis, A to Z. You won't need another book ever in your life. And yes, it is live. It is live. This is a live class. We teach you how to scan, how to learn powerful patterns to generate above average gains, learn how and when to enter the trades, how to position size and manage your trade, that risk tolerance. We're going to go in depth with it. Learn how to read the market internals and their role in the overall market, because people out there, they go like, I want to buy Tesla. It's like, I want to buy Tesla. It's like, seriously, guys, have you looked at the internals? Have you looked under the hood? Have you looked at literally all the sectors? Have you looked at the Qs, the SPYs, the diamonds, and Russell? Are they in sync? Are they divergent? And then you get to pick your stocks. It's not the other way around. It's not like I want to trade Microsoft, I want to trade Apple, I want to trade Google. No, it's all about the market internals. And you have to do whatever the market internals say. If market internals are strong, then you get to pick a stock within a very, for example, if the market is up, if Q, SPYs, diamonds are strong, you go and you start scanning for a sector that has relative strength, and you're going to pick the strongest stocks that are lining up for buy signals in that sector. Maybe there can be one or two or three, right? You pick one because you want to be diversified, okay? And you pick one stock and you run with that one. That's it. And then you pick another sector that has relative strength. Why that? Why do you think that is? Because you need to get in a stock that will have high velocity. That means ease of achieving targets. And you need to pick a stock that has relative strength compared to the market. It means that it will run faster than the market. You're not going to pick something weak just because the market is rotating and say, oh yeah, it's going to be a short squeeze. No, you got to pick something. So you have to know all the scanning criteria. So basically, we're going to teach you everything from A to Z. You won't need another book or coaching or anything. Plus, you're going to get access to my swing trading. Oh, it's August 1st to 5th. Okay, sorry about that. So yeah, I totally thought that it was 8th to 12th. No, it's actually, sorry about that. It's August 1st through 5th. From 6 p.m. to 8 p.m. Eastern, because this class is for individuals that have full-time jobs, right? And you want to manage your own money. So that's why we schedule it for the afternoon. You get free access to the Stock Swing Trader for 3 months. Course tuition is $5,999. If you're going to my website right now, this is how much it is. If you want in on this course, this is just a special just for you guys today and tomorrow. That's it. And I never do this. We never do this. It's $1,000 off. $1,000 off. But you need to sign up by July 22nd. That's it. And that is Friday at midnight. That's the deadline. Okay. So if you want to sign up, you send me an email at info@TradeOutLoud.com, because if you go here, you're going to pay $5,195. If you think, hey, I do have the trading education, I just need, kind of like have an idea about trading. I know how to place orders, but I just need some help, scanning. I just need some help with stock picks. I run a program literally that is amazing, not only in the terms of performance, but in the sense of longevity. I have been running this program since 2010. And actually this program ran since 2008. But for 2 years, I did it pro bono. I was just sharing my trades with a lot of traders. I think there were like 80 traders or something like that, 80 investors that I helped out through the economic crisis, through the financial crisis in 2008. This is a program, if you have a full-time job, this is a program for you. Okay. Smart trades, smart decisions, smart profits. So basically what you're going to do at the end of the, on Monday night, you're going to receive a big email. And in that email, you're going to have all the earnings for the week. You're going to have a video with the market overview on what to expect in the following week, with the homework already done with the stocks that we're watching. And on Sunday, as soon as Sundays, you're going to have access to my personal live portfolio, where I'm going to start posting my trades. So they're ready for you on Monday, right? So on Monday, you go like, boom, I'm going to put the trades on. Okay. Not only that, but if you're newer to trading or investing and say, hey, I don't know how to, I don't know how to manage, or I need some updates, I want to see what's going on. All right, so here it is. This is from today, guys. You can see that I just took the snapshot. This is from today. Microsoft hit target 2. Do you guys know when we took Microsoft, when we took the trade? Today. We took the trade today. We're up huge in it. We took the trade at $260, and Microsoft, we're going to get some charts, but it almost ran to 265. Yep, that's right. Meta. Do you guys know when we got into Meta? We got in Meta on June 27 at $170. It's trading over 180. $10. 181. I think it had 183 today. We made $13 on it currently, right? Meta, over 180, approaching target 2. Here we go. 7 new trades posted in the performance portfolio. Boom, alert. You get your private Twitter alert. Running another scan. You could see that, I'm communicating with traders because I didn't have any trades on. It's like I'm running another scan. Here's another post that I made. A much different market than we had yesterday. Take a look at the SPYs, blah, blah, and I explain the technicals and so on, right? So I give you guys updates throughout, all right? Some of the reviews here. All our traders are extremely happy. All right, so what you're going to be getting: live swing trading investing course. Value is $5,995. You guys are getting it for $1,000 off. Plus, you're getting the manual, 500 pages. That's $3,000. It's an e-manual. You're getting 3 months access to the Stock Swing Trader. All right, that's about $600 value. This is like literally priceless. Imagine somebody coming in and saying, hey, you know what? I'm doing all the work. All I have to do is pay $199 and you're going to be making thousands. I mean, seriously. And the price is going to go up for the Stock Swing Trader. It's going to go up to $350. So you better lock in if you want in on the Stock Swing Trader. If you just say, hey, you know what? I don't want the education. I just want the stocks. Lock it in early because the price is going to go to $350. My trading room is $299. The trading room is going to go up to $450 very soon. We have private Twitter feed, right? Where I'm updating you guys on the market conditions because you guys are busy. You guys are at work. You get the platform layout and say, hey, you know what? I don't know how to arrange my trading platform. I don't know how to do it. I traded with Thinkorswim. So I'm going to share with you my layout. If you're using Thinkorswim or if you use any other platform, you can arrange it the way I have it. All right, so this is pretty much it that I'm looking at. And right now, what I want to share with you guys is some of the trades, for example, that I took today, right? I took Caterpillar. All right, so I'm going to show you. All right, here we go. Do you guys see the screen right here? Okay, let me just pull this like that. All right, let me see. I hope you guys can see it. I'm going to do this, okay, because I want you guys to see. Okay, here we go. All right. So you can see it right here. This is these are the trades that I call. Look at this: Caterpillar, Microsoft, Google, Apple, DD, XOM, and Walmart all today. Boom. Here we go. This is where Caterpillar is. You can see it today. It went to $179. Okay. So Caterpillar, our entry was $180. Hold on a sec. $180. It ran up. So Caterpillar had a high today of $180 and $80 still in play. Very promising. I think Caterpillar is going to go higher, at least 83, 85, even 190 for targets. Microsoft, let me punch it in, MSFT. All right, so Microsoft right here, I just want to have this side by side so you guys can see it. $260. And by the way, do you guys know when we call this trades? When I call these trades, I scanned last night. Do you know what I was doing? Last night at 10 o'clock, I was scanning. All right, so I sent the list. I say, guys, check out your portfolio. We popped in 7 trades. Here they are. Okay, so I do all the work for you. You guys don't do anything. Okay, so here we have Microsoft long, $260, right? And we have target 262, 263 that were hit today. Microsoft went up to $264.87, very close to our target too. Are you kidding me? Google, Okay, I don't know if I have time. All right, Google, here we go. And tomorrow, I promise you guys, we're gonna do charts. Okay, I don't do options. I love owning stuff. William, I love owning stuff. All right, don't do options. I love common. Okay, so for example, I did have Tesla here options. Okay, I did have, I know, you saw it here. Once in a while, I throw that out. I don't use it. For example, if there is something that is really pricey, then I tend to use, if it's $700 or $500, then I tend to do options. But other than that, no. All right, so this is Google right here. You can see 550 Google. This is a typo, guys. Sorry about that. This is a typo. It hit target one right here. Okay, then we have Apple. Just wanted to go really quickly through it. Apple, $152. You can see where the price is at right now. It had a high today of 153.72, and Apple close to first target at 154. So very close. We were less than 30 cents close to target one. And in one day, I'm not talking about a week. I'm not talking about staying in trades for a month. No, I'm talking about velocity. I'm talking about getting into trades, for example, today, and possibly closing to trade at the end of the week or next week. Right? Because when you're swing trading, you're basically, and you get the picture here, all our trades are green. Take a look at Meta right here. Wow. Okay. So basically what I'm saying is that, if you're ready to start making money in the market, and if you're ready to learn a skill that is going to be so valuable, this is it, guys. Okay. David, I'm all done. Thanks so much, guys.